Good afternoon, everybody, and welcome to this webinar this afternoon, where we'll be looking at some of the issues and some of the opportunities and some of the challenges around the subject of SWIFT GPI. SWIFT's Global Payment Initiative, how to drive full value from SWIFT GPI. And I'm joined by a couple of speakers who I'll introduce to you at the moment. And thanks to ACI Worldwide for hosting this. My name is Gary Wright from Finextra, and I'm moderating the session with our speakers. And as I say, thank you very much for registering and spending your afternoon with us. So let me set the scene a little bit, because SWIFT GPI is something we are familiar with. It's live, it's launched, but there's a lot more to happen. There's a lot more opportunity, and there's a lot more transformational change that banks' deployment of SWIFT GPI can drive. And in a period of time when the payments business is undergoing great transformation change, moving money faster, having to shift the infrastructure to accommodate the impact of that, managing data, looking at the technology, the involvement of SWIFT, and the use of third-party solutions for banks to help them cross the line in terms of how they can support their transformational journeys. It's hugely important, and a part of that is SWIFT GPI, not just as it is today, but how it will evolve in the future. So we're going to look at some of the issues where are we currently in the deployment of SWIFT GPI? What are some of the benefits that can be reaped today? But what are some of the wider opportunities, and how do you actually attain them? What are some of the things you have to think about to be effectively deploying SWIFT GPI in your organization? And then what are some of the real benefits that drives for the banks and also for their customers? And what are some of the new initiatives, the more advanced initiatives as we refer to them in terms of the use of SWIFT GPI? We've got a couple of polling questions we'd like you to take part in, if you will. And there is a paper that you can download that ACI have provided in terms of how you might obtain the full value of SWIFT GPI to your bank, how to reap the investment that you've made into it, and what are some of the opportunities and benefits that you can attain, as I say. So please have a look at that, and I encourage you to download it. During the whole session, there's plenty of opportunity for you all to contribute, and I encourage you to do so. Please fire in some questions to me via the link that you have, some observations on what you're hearing, some questions around what you're hearing, some thoughts. Please share them. It's a very interactive, conversational debate that we're having today. So I'm going to ask our two speakers to set the scene with some opening remarks, but let me introduce them both, and thanks, guys, for your time today. We have Daniel Lynch, who is the Payments Innovation Manager Americas for SWIFT, and we have Craig Ramsey, the VP, Head of Real Time at ACI Worldwide. And thanks very much for joining us. So we're going to get into quite a series of discussions and debates, but as I say, maybe it's worth just setting the scene a little bit and your perspective of SWIFT GPI, where we are today, where it might lead to in the future. So Daniel, can I ask you to lead off and share some of your thoughts with us all? Daniel.
Surely. Thanks again for the introduction, and it's a pleasure to speak to everyone here today. My name is Daniel Lynch. I am the Payments Innovation Manager for the Americas here at SWIFT. I've been here for about close to 5 years. Previously, I was working in our product team for reference data and business intelligence in the Americas as well, and then also leading the business development team for North America in the eastern portion of North America. I really often enjoy participating in these webinars or in public events because I think there's often a lot of misconceptions to dispel about GPI. If anyone can rewind back to around 2016, they'll recall that there was another I in the acronym. It was the Global Payments Innovation Initiative. And I think sometimes because of the success with some of the product sets that we've rolled out within GPI, people lose sight of the fact that this is an ongoing rolling initiative where, we've always had two goals. Number one, to mitigate friction in payments wherever possible. And then the stretch ambition is always number two, to eliminate it entirely. So I like to speak a little bit, and I think today we'll get a chance to explore a little bit the differences between GPI yesterday, today, and tomorrow, I like to say, where we have a product set around, tracking, same-day value, traceability that's quite compelling to folks. We've extended that out a bit into the ability to say stop and recall a payment. And the tomorrow function, taking a look at some of the exciting new services that we're developing, such as our pre-validation API, our case resolution service, exploring some instant corridors perhaps beyond that same-day SLA, and then, of course, some of the even more future-oriented developments we're working on. And also revisiting a little bit that as we develop these new services for these vanguard participants of GPI, if you will, how we're ensuring that there is a constant lift to the lowest common denominator at the participant level, where we're trying to really eliminate the delta between, what a SWIFT payment, what a GPI payment was 2 or 3 years ago to what a SWIFT payment is today. And we can talk a little bit about our ambition to have payments universally confirmed on the SWIFT network, how they're all universally traceable today. So there's always this interesting dynamic where we're working with our members as a member-owned cooperative to try to determine what are these continued headaches, frictions, problems that we can address with new services, and how we can take those services that have been successfully deployed across, a significant percentage of the is participating in cross-border payments, and how we can make those universal across all of our participants.
Thanks, Daniel. That's a good scene setter there from SWIFT's perspective and the industry. Particularly like the idea that we should be obviously looking at where we're going in the future, but as you say there, we've got to bring the whole industry across to scale up, and we've got to perhaps have a bit of a deeper conversation about where we are today and how we do shift that across. So we'll come back to a sort of stock take on where we are today and move on from there. So some good points that I know we're going to touch on again as we go through the discussion. So Craig, can I turn to you to do likewise, really, to share from your perspective some of your initial thoughts on this initiative and where it's at the moment and indeed where it's heading. Craig.
Thanks, Gary, and thank you, Daniel. And thank you, everybody, for joining us on this webinar. Whatever time it is, wherever you might be anywhere in the world, thank you for taking time out of your day to listen to what we've got to say. And hopefully we're going to give you some reassurance as to how you can be ready for some of the mandatory things related to GPI that are heading your way over the next 12 months or so. So just by way of introduction, I'm Craig Ramsey. I'm Global Head of Real-Time Payments at ACI. And interestingly, within real-time payments, we include our SWIFT and GPI initiatives within there. Certainly, one of the major benefits of GPI is reduction in the friction that Daniel spoke about, but also we see a push globally for faster and simpler payments with more tracking, with more data, easier reconciliation. So whether it's a domestic real-time scheme that may be being rolled out, or indeed in many countries now already live, or some of the cross-border initiatives that are speeding up and improving the customer propositions around faster payments, we see those as very much hand-in-hand initiatives that banks need to prepare for. ACI ourselves, we provide bank connectivity and payments processing solutions. So whether you need a connection to a SWIFT solution or a real-time scheme or an RTGS or an ACH, that's where ACI has been in the industry for over 40 years, providing solutions. In fact, ACI were very first year of SWIFT doing its gold payments program. We were front and center of that, getting certified, and have held that the maximum level of certification and accreditation ever since. And ACI were first to be certified for GPI as well. We bought some of the member banks into the pilot and supported them in their rollout, and we continue to do so. It isn't a one-off thing with GPI. We started our investment, way back when in 2016. That feels like an eon ago, but we have continued investment ever since. And indeed, we have continued product-based investment for our customers so that they can leverage our upgrades, our supported upgrades as GPI changes and evolves through the next few years. I think we'll get back into some of the changes coming up with GPI in the next few years, and some of those initiatives, and indeed what it means by way of a benefit for customers. So very much a vision of not just how do we get the entire SWIFT base ready for what is optional and beneficial, but also what is mandatory as part of the SWIFT changes next year. So how do we support banks, our customers, and indeed new customers in their drive to be ready for GPI? And we should absolutely look at some of the benefits that brings, some of the benefits that customers have already experienced through GPI, and what that can mean for our audience today.
Craig, thanks very much for that. Indeed, added to Daniel's comments, and I particularly like the idea of looking at what's optional and beneficial, what's mandatory, but then how do you shift beyond that, and what are some of the benefits we're going to look at. Before we move into a bit of a wider discussion, we've got the first of a couple of polling questions that I'd encourage everybody to take a look at and respond to. And the first one is really designed to ask you, as the registered listeners, what stage are you at within your organization in terms of SWIFT GPI implementation? So that question is going to be appearing on the link before you, and there's a range of options that you can select. So again, I'd ask you to take part in that and give us some feedback on where you are in terms of SWIFT GPI implementation. And the other thing I'd like to say is thanks very much for your questions, because they're firing in. And I'm looking at them now, and I know that we're going to cover them during the course of the debate. So please bear with us, because we're going to get into those points that you're kindly sending to us, and I encourage you to keep doing so. Right, so thank you for those opening remarks, Daniel and Craig. I don't want to go back into the origins of SWIFT GPI, Daniel, but I think it might be good context to pick up on what you were saying there. So a quick reminder of the purpose and the introduction of SWIFT GPI and its current sort of take-up across the community and the primary objectives and benefits for a bank as it started with the initial launch of SWIFT GPI. So maybe you could just give us some views on that, sort of a summary of where we are today as an industry, Daniel.
Yeah, so fundamentally, GPI has always been about folks involved in cash management, the bank, payments product management, the innovation lab, treasury, thinking about how they can serve their customers better, right? These can be internal customers. You may be serving folks at your institution who work in custody or trade finance or the private bank or retail, or you could be looking directly at those external customers, corporations, investment managers, insurers, or retail again. And fundamentally, in the digital age, if you will, customers have higher expectations, right? I go to a lot of conferences. We talk a lot about RPA and bots and how to automate processes, but fundamentally, there's still a lot of people working in financial services. And I think there was a bit of a fundamental disconnect when you could track a package or even like a pizza at home and not $1 billion payment, right? Folks increasingly are used to instantaneous gratification. So like in retail, this is visceral, right? The customers want what they want and immediate. But also, imagining, the life of a corporate treasurer, they don't just simply turn off their expectations or their baseline for what a service should be just because it's 10 a.m. on a Monday and not 7 p.m. on a Saturday. And I think the community really recognized that a few years ago and decided that the best approach would be, yes, to find out how to address some urgent issues, which is really the conception of what we built in GPI in year one, but also build a framework such that these GPI participants could come back together each year and democratically decide amongst members what to tackle next. So we saw that with, the year one GPI that I think so many folks are familiar with, and often I think mistake.
Daniel, we've lost you there. Are you still on the line? So Daniel, if you can hear me, we have lost you there. But Craig, can I ask you to come in there and just pick up on some of those points?
Yeah, absolutely.
Restore the line with Daniel.
We'll figure out the technical issues with Daniel's line. So, I think it's important that we look across the value proposition that we're talking about. GPI, as Daniel was talking about, was initially introduced, bring the friction down, reduce the friction, remove the friction. It would also introduce to speed things up, give better data to customers. Now, we're not just giving customers that better data for fun. They don't just want to receive a load more data just to fill up their systems. What they're actually able to do is to use that data. They can use the certainty of the settlement. They can use the certainty of the charges, the FX rates. They can look across their payments and determine how they can then use that money better. By having certainty of settlement, they're able to schedule their payments wiser. They're able to process their incoming receipts better and then instantly reuse that money. So it's a very clear service. We talk to some banks around the world, and actually the corporations that are leveraging these services are actually getting much smarter with how they do it. So they're looking at their payments processing and realizing that some of the chains that are used in the corresponding banking network are actually showing up friction points. They're showing up points where STP isn't flowing through instantly. They're seeing points where charges are occurring higher for one path versus another path. And they're then changing their payment flows. I've been in this industry for too many years. And some of the earlier projects I did was around payments hubs. It was these smart corporate treasurers who understood the payment flows and were able then to direct their payments a certain way to get the optimum settlement. Well, now they're taking it one step further. Now they're saying, actually, I don't want to use that correspondent. I don't want that correspondent in my payment path. I want to go this way. And therefore, in order to do this way, I need to do my banking a certain alternative way. So they are being able to leverage these products and services. Now, let's talk about what's mandatory and what's optional. So as of November next year, every bank will be obliged to provide confirmations on GPI transactions. And let's look at what confirmation is. It's the ability to send in either an MT199 or an API-based message that confirms that you have received the payment and that you are processing it, or better still, processed it, with FX rates provided, with fees, with certainty of value dates. Everyone needs to do that. And in order to do that, you need to receive that MT103 or 202 or cover payment, whatever it might be. You need to receive that payment coming in and be able to pick out data from within your payment engine or within your broader back office system, pick out those data points, collate them into a response confirmation, and send that confirmation back into the SWIFT network, into the tracker database. Every bank has to do that. And that's no easy task. ACI have got products and services that can help you achieve that. That's part of the, the promotion that we've been on with SWIFT, and that's part of the work that we've been doing across the world to show how we can do that with our products and services. Now, the actual sending of that confirmation, that's the hard bit, but it's also the mandatory bit. In order to become a full GPI member, you need to be able to send a GPI message, a request for requesting a GPI message itself. Now, in order to do that, that's when you sign up for GPI. And obviously, a lot of banks over the last 3 years have been signing up for GPI. We see the fantastic growth and statistics across GPI for the last 3 years. And in order to, when a bank signed up for GPI, they said, okay, we're going to send and we're going to be able to respond as well. We're going to send an MT103 GPI message and we're going to be able to respond to a GPI message. Coming next year, it becomes mandatory for everyone to be able to respond to a GPI message. The only optional bit that you sign up for is the ability to send a GPI message, to actually be the initiation point. But if you think about
Craig,
that...
Sorry, yeah. Can I just because I want to come into that, because you're going into some of the areas that I think we can really spell out the impact. But I'd just like, if I may, just come back to one bit that Daniel was referring to. Can I just check? Daniel, are you back on the line?
I've actually, apologies, there was an audio thing, my phone dropped. I am back in. And yes, if I may, could I just piggyback on the statement there just really briefly about this difference between being GPI enabled and really taking advantage of it? I really
Daniel,
do see...
Please do that. Yeah, go.
Yeah, we do really see sort of four classes of institution in this GPI journey, particularly in the context of these universal confirms, and I think very relevant to some of the points made earlier about intelligent routing and corporate for corporate treasurers. We see, institutions that, for now at least, in the context of next year's universal confirm, are planning on complying with that. That's fine. We see institutions that are adopting GPI and beginning to use it internally, right? So you have access to this tracker and you're going to give a much better customer service experience from the call center. We see a third level of institution that is really taking that data and beginning to white label it in their banking portals, perhaps exposing the tracking to their multi-bank corporates via messaging or APIs, but then for some of the SMEs, giving them that sort of white labeled instance of our tracker. And in those cases, we've seen things like call volume around investigations of payments drop by, up to 90%. And then finally, I think the interesting part that was alluded to is when you get into that fourth category of when you have this history of all the events associated with all of your outbound payments, you know who all the participants were, what their processing times were, what their fees lifted were across all of your different payment corridors, you can really begin to play with that data for really interesting experiences around adding optionality into payments, right? Measuring what's more important to optimize. Is it speed? Is it cost? And particularly in like a portal that serves an SME, presenting them with that choice, because choice is really, I think, at the core of a lot of our consumer decisions these days, right? And as a retail person myself, I like choice, but I think at the corporate level, being able to optimize for those by leveraging that data has been a really distinguishing factor of using this service the past few years.
So Daniel and Craig, thanks for that. And we're getting a lot of questions in, and some of them we are touching on. So I hope that everybody can recognise that some of the reasons why this is happening, some of the transformational benefits are being described by you as you introduce the subject. Two things I'd just like to touch on. Firstly, when we ask the question about what stage are you at with your SWIFT GPI implementation, here's a question I want to come back to in a moment, Craig, but in terms of live head office, 10%, live head office and internationally, basically 20%, signed up, implementation project underway, basically 23%, signed up, implement strategy still being determined, 12%, and no current plans for GPI, 35%. There's some interesting initial responses to that. And we're going to put a second question up now, which again I'd encourage you.
Do you mind if I benchmark that briefly? Do you mind if I just benchmark that so folks know where they're standing? Oh, good.
Right. Before you do, Daniel, can I just set the scene for the second question so that people can do that, okay? Move us on there. So the next question we're going to ask you have a range of options, is why are you implementing SWIFT GPI? So with the same enthusiasm, if you could give us a response of that. And Daniel, please, a quick reference to that, but I want to go back to a question for Craig on this head office branch network link. But Daniel, a quick response to those survey results.
Yes, perfect. So apologies, I think my phone dropped. I did want to get those stats up so that folks would have some context, and apologies for that audio visual error there. But we have in SWIFT about 11,000 legal entities connected, of which over 3,500 are currently signed up for GPI. That represents around 500 banking groups. And although that's about a third of the legal entities connected to SWIFT, we know that there are certain concentrators. So we're actually looking at about 55% of payment instructions are currently being sent as GPI. And given our current onboarding projects, by the end of the year, that will be in excess of around 80. So it is very interesting to see that uptake, both at the head office and branch levels.
Thanks for that, Daniel. And Craig, I'd like to come back to you because we've had a good dip into the future and some of the things and initiatives that we can come back to, and there's some questions on that coming in. But I would like to go back to where we are currently in the state of play, because obviously there's technical implications for this. There's ownership within organizations as to who owns and drives SWIFT GPI and where the benefits are appreciated and realized. So one of the things that does strike me from conversations in the industry is basically where are we in terms of what's holding banks back in some quarters, individually, which has an impact on the industry collectively, in optimizing the wider adoption and benefits of SWIFT GPI. And it seems to me, maybe you'd like to pick up on this connection to head office, but not connection to the wider branch network. So they're connected centrally, but not globally. And so what's your thoughts on that?
Yeah, so we refer to that as the long tail within the GPI world. And what that's effectively meaning is that we are seeing head offices of banks enthusiastically sign up for GPI, and then they need to figure out their strategy for how to support it. And you know, the clue was in the name actually, that it was the global payments innovation. And actually Daniel has got innovation in his title as well, and I've got real time in my title. Those are not accidents. That's the very representative of how we should be thinking about GPI. A bank that looks at GPI as a compliance challenge probably can get a business case through fairly easily because of it being recognized as a compliance requirement. And you know, every year we all spend a lot of money on compliance as we need to. But actually the true benefit of GPI is in that innovation piece. It's about improving those products. It's about opening up the customer proposition. It's about providing more data. You know, it's about when we're tracking that database, actually being able to supplement it with data elsewhere in the bank to give an even richer data tracker than what would be just available through the normal data tracker of SWIFT. But we can provide an even richer set of data combined from the SWIFT data tracker with other data such as invoice data held at the bank. So when you look at the innovation, that's when a bank starts to struggle a little bit, because if it's been approached as a compliance initiative, then you probably get the head office upgraded quite quickly, and you probably do the bare minimum. So there's two factors then. Firstly, are you really leveraging the benefits of GPI? Are you truly offering the customer the greatest proposition you can? And I think you've got a story, Gary. We were chatting when we were prepping for this, how a bank has recognized those benefits and has rolled it out throughout their entire bank estate, all of their BICs, and are now front and center on RFIs and RFPs from large corporates, saying, "Look what we can do as a result of the innovation that we've put around GPI." But when I talk to banks around the world, when we visit our customers, visit our prospects, we quite often see, very different story. We quite often see a lot of manual entry of payments. We see manual entries of MT199s when sending messages. So if we fast forward just a year from now, next November, we're seeing the need to send MT199s on any MT103 you receive. Do you really want to be entering those manually? Do you have the ability to send that electronically? Because if you don't, you're either going to need to stand up a lot more people to support it manually, and manual operations are going to lead to errors. They're certainly not going to be helping the STP, and that's when the corporations down the line will see that in the tracking very quickly. So what we're trying to do is to support that long tail. Yes, you may have got your head office upgraded, you may have your head office operational, but do you have every BIC in your estate upgraded? Are they all running on the same payment engine that's necessarily been used in head office? In the large global banks, we quite often see multiple different payment technology used throughout the world. It's not always the same. It's not a common infrastructure. So one of the things that we've been doing at ACI is very much building a proposition around protecting what you already have, but enabling you to support the latest GPI service. It's a wrapper. It's a wrapper to your payment engine, if you like. And it's a GPI wrapper to take benefits of the latest products and services that are coming your way with SWIFT, but it actually enables you to start to innovate as well. It's not just about the compliance that's now mandated.
And Daniel, from your sort of global SWIFT perspective and the reference to the long tail, what's your thoughts on this topic?
Yeah, I've seen a lot of evolution recently. What with this trend I referenced, where we're trying to lift this lowest common denominator, where there's going to be little delta between what was a GPI payment a few years ago and what is simply a SWIFT payment. And as we referenced earlier, a branch enablement across some institutions has been a challenge. Some institutions have a very well-run, centralized infrastructure globally. Others, for completely legitimate reasons, may have a more decentralized model, and others maybe because of legacy technology or M&A, where there is an issue with maybe enabling branches sometimes. And then, of course, let's not forget, there are a number of smaller institutions, not necessarily branches, be they regional banks, community banks, credit unions, money service bureaus, for whom, they just by nature are, small to medium or small to medium large. For these folks, though, we find increasingly they really play in the respondent space, where their underlying customers are largely, corporations, retail, investment managers, and not really acting as intermediaries for other financial institutions. And I think a lot of folks have come around to the earlier message that if all payments now carry the end-to-end tracking reference, and if next year I have to provide the confirms, essentially all of the investment that has been done to become a GPI member is essentially part of the sunk cost of just participating in payments today. So the question then becomes, how can I better begin to leverage this? How can I begin to provide this tracking to my customers in a white-labeled way? How can I begin to leverage this data to provide optionality in these payments? For my corporates or underlying customers that are multi-banked, how can I give them this feed so that they can rationalize this with their activities with other institutions in a single window in their treasury management station? So we're starting to see that happening, those thoughts, that planning amongst this longer tail of both branches and small and medium institutions, and it's via partners like ACI that I think a lot of them are beginning to engage to make this plan, right? Number one, how can I begin to comply with this ask that we confirm payments universally, but then more importantly, how can I really leverage this to please my underlying customers?
So that's a good point that, again, is touching on some of the points and observations that are being raised. One of the points there that came in, Daniel, is you touched on where we are today with, shall we say, SWIFT, GPI, BASIC, and obviously we've talked about what happens when things become mandatory. Is there a view from SWIFT as to what kind of level of penetration you'll be hitting in 2020 and beyond?
Yeah, so essentially today, something that a lot of folks don't realize is that all payments are now traceable on SWIFT. So forgetting the transparency on fees for a second and the NBENI confirms, as long as a payment instruction is traveling on FIN, it is traceable, right, across GPI and non-GPI participants. SWIFT has gone ahead and begun to strip that tracking reference out of these headers of these messages, such that you could send a payment to a GPI institution that further credits to maybe 2 or 3 non-GPI institutions before reaching, let's say, a GPI-enabled end beneficiary bank. You would have end-to-end tracking on that payment. So we're trying to, again, lift this experience regardless of the participant levels. But next year, again, we do expect to see a significant proportion of our payments being confirmed at the end mile. And an important distinction that's not necessarily just transmitted over SWIFT, right? So we have, again, it's the Global Payments Initiative, not the SWIFT network or the FIN Payments Initiative. We have taken a special care to engage the 90 or so market infrastructures that use SWIFT as a messaging layer, countries diverse as Australia, Canada, Dominican Republic, Chile, Albania, but also recognizing that there are a few that have proprietary messaging standards that we think are probably, representing an important proportion of payments. So as you may know, FedWire messages are GPI enableable. CHIPS, we've engaged the Bank of Japan, the ECB, the SIP system in China. So we want to extend that tracking out, not just on the SWIFT network, but really in an end-to-end experience. And between, the mandates, I think some of the competitive pressures that folks see, some of the enablement we're seeing from some of our, providers of core systems as partners, and for some of the smaller institutions, some manual solutions that we've been creating, some of these lower volume recipients of payments. I'm actually quite confident that we'll see very high rates of confirm by the end of next year.
Thanks, Daniel, and thanks everybody for the questions. I mean, we really are touching on a lot of the points that are coming in around the use of SWIFT GPI. One of the points that's come in, Craig, is the profitability of it all, and I don't think we're talking about just financial gain. So I'd like to go back to some of the earlier points that you touched on about the wider benefits and some of the points are coming in. So let's just backtrack and respond to some of those points. What we're actually saying now, it's more about the data sets, those that you can extract from the messaging and those that you can add to it than just the messaging itself. And then you can take a more holistic view of your payment flows. And are we saying that in some cases you can track the route of a payment from point A to point B to point somewhere else, and then look again at how you can manage that more effectively, i.e. settle quicker, settle faster, and give that benefit back to corporate treasurers. That's some of the points that you're alluding to there. I take from what your comments there.
Yes, that's right. It's about empowering the corporate treasurer, who they're very wise people. They know how they want to make payments. But you know what? None of them get up in the morning thinking, "Oh, great! I get to make a payment today." What they actually all get up in the morning is to how can I make the payment work effectively so that I can maximize my liquidity in my corporation, in the place I work. And they're looking for more information, such as the the payments tracking, the invoice data, so that they can then manage that liquidity better. They obviously, dedicate departments to making sure that the corporate treasury is effective and efficient. But they also get to, once we start pushing out, and start looking into the future of ISO 20022 messaging, some MX messaging, not just the MT103s, we're going to start to see richer data as well, not just richer in terms of the confirmation, but actually better invoice data carried with the payment. And ACI have done studies where we've shown that there's a cost saving to the corporate treasurer when they can reconcile their data better. And it's a significant cost saving. So any bank that's offering richer data to their corporations, to their customers, will obviously have a competitive advantage over those that are not. And that's really, one of the key elements of GPI. And I said it at the beginning, it's a journey, it's an evolution, it's not a revolution. So yes, we've got a, pretty hard and fast date for next year. But if we look at the evolution that's happened with GPI, from the very first few payments, now we've got GPI for corporates, we've got GPI Instant, where we've got cross-border GPI transactions now settling over real-time domestic schemes to speed up the settlement of the funds there. We've got various other things coming. So there's the GPI directory. How do we leverage that to improve the routing of a transaction, the routing of a transaction? How can we leverage a pre-validation service that's being launched with GPI to ensure that a payment is going to pass through? So let's just stop and actually pause on that example. With pre-validation, I mentioned earlier about banks still manually entering payments. Well, corporates obviously enter payments as well. Some of them come from their back office systems, their ERP systems. But in a time or in an instance where a payment is entered manually, you kind of want to know that it's going to pass through. And that's all, I've been around this industry long enough to know that international STP rates have always been something that have been targeted to be improved. Pre-validation allows for that to happen. It will allow you to query the chain of the payment and even ensure that the beneficiary account is open and ready to accept the funds at the beneficiary bank. That kind of pre-validation saves time and money. It saves the corporate from getting the STP wrong. It saves them having to pay a repair charge. It saves the bank potentially repair costs in order to do it. Maybe the bank's entering the payment manually. It saves them the effort of getting it wrong as well and having to explain to the customer how they mistyped something. So there's a lot of services and, here's that word again, innovation coming as part of GPI. And that's really the journey a bank needs to start thinking about. This isn't just a translation. It's not just a technical fix for supporting GPI. You have to think broader. Think about the propositions that the customers will have. Think about what the future propositions look like and how they can save a bank money, how they can save a corporation money, and we can start focusing on that innovation element. That's when banks and customers will really start to benefit.
So Craig, thanks for that, and I'm sure, Daniel, you'll have a view, but if I could just pause for a moment, because Craig, that's a nice segue into responses to the second polling question we put up. And just to recap, we're asking why you're implementing SWIFT GPI. And roughly 23% think it's a key solution for modern day payments. 34% is about improving the customer's experience through the transparency of data, some points that we've already covered. 10% is because we have to remain competitive. 8% because they want to save resources on customer inquiries through the offering of self-service, and indeed, I suggest, the streamlining of the way that the transaction instructions themselves flows. 2% is about new revenue streams, and 22% or thereabouts it's because it's part of a wider payments modernization set of projects. So I think that really resonates with some of the points that we've touched on there, and the recognition that this industry is transforming and that SWIFT GPI has an integral central part to play in all of that. Daniel, any responses either to some of the remarks that come back from the questionnaire, or indeed just on some of the points that Craig picked up on?
Yeah, some of the services that Craig mentioned are actually very near and dear to me. I think it's very exciting, some of the services we've begun to develop this year. Essentially, financial messaging has existed for something like 1,000 years. It may have been over the telex. It may have been over a raven, in the medieval times. But there was always this idea that you could send a message for, to another party for further credit. And I think a lot of the things that we did in the early ideation of GPI really created a significant impact, both internally at the bank and the way that they exposed to customers this tracking, this traceability. But I think we've sort of changed we've flipped the chip a little recently, where we're really trying to be a little bit more ambitious and saying, what can we do if we were to step back and imagine, what if we invented payments today, in the digital era with the technology we have today? And I think pre-validation, again, is one of the most exciting ones. It's not SWIFT message specific. You could pre-validate payments instructed over the Fed, over ACH, over point-to-point connections or other digital channels. But we do find, though, at least in the SWIFT world, a lot of the wholesale payments, we hear that something like 3 to 10% of payments do fail because of incorrect or incomplete beneficiary data. And in fact, to repair those payments costs anywhere from 25 to 35x what a payment with STP would do, right? So even if it's a small percentage of your payments, we're talking about a cost that's equivalent to the entire complement of the rest of your well-functioning payments. So it's very exciting, the opportunity to try to tackle that, particularly, as mentioned before, we start to transition into some of these more real-time corridors. Secondly, even in cases where, say, pre-validation may not be the complete solution, we also have another API-based service we're building around case resolution, such that an in-flight payment, maybe there's a nested correspondent 2 or 3 legs down a payment that needs to clarify some information about a debtor. Maybe it's an incomplete debtor name. Maybe there's a date of birth needed or additional documentation. We have developed a service such that they can really achieve 3 things. Number one, we know that in the world today, with a lot of anti-fraud concerns, with the Wolfsburg Group's recommendations, with a lot of KYC practices, there usually isn't a messaging relationship open with someone with whom you don't have a direct account relationship. That doesn't mean that they're not going to need clarifications on initial ordering parties. So we've decided to augment this pre-validation API with a case resolution API so that, number one, there is a direct messaging relationship between the bank with the issue and the bank that can solve it, right? Which is a vast improvement over today. But we decided, number two, that's not quite enough. Number two, we want there to be a clear audit trail. We want you to know that a request for a case has been opened, that it's been acknowledged, and then have an SLA around resolving that case. And number three, we're using the ISO 20022 data dictionary to formalize these cases as much as possible. So it's not just a question of someone on the end finding a document or a birth date, but really that we can automate these processes to the greatest extent possible. And I think these 2 services together are going to serve to enable some of these real-time corridors that we're trying to develop. So we've seen that, as we noted, something like 53% of payments are being credited to end beneficiaries within a half an hour. What we're trying to do is extend that, though, with parties that are willing to provide, faster SLAs on the SWIFT network, but then also partnering with local real-time market infrastructures like we did with the Australian MPP, what we're looking at with Singapore Fast, and also with TIPS.
So thanks, Daniel. And just as we move into the final 10 minutes or so, I think there's been some tremendous conversation here, and we've tried to cover up all your questions. I know that we're not raising them specifically, but I do see that the questions that you're raising about its use, GPI, across networks, its standards and its new advantages and initiatives and how it's being deployed are all points that we've covered in response to the questions you're firing in. And you may wish now to think about having further engagement with ACI as you look at your SWIFT GPI strategy and deployment of the initiative across your organisation. And there is a slide for you to respond to if you wish to have some further engagement with ACI. And of course I encourage you to do so and to download the report that has been posted to the link. So I suppose for you, Craig, I really want to sort of hone in on how this all starts to happen. I mean, Daniel's touched on some of the initiatives there, but from your perspective, talking to the banks that you deal with, how rapidly can you think we can now push on with this initiative, having launched it and got it live? And I think perhaps, is there a need for greater understanding of the benefits in terms of use cases, or are you seeing now that banks are really open to a wider engagement to tell me how we can really maximise this? And I suppose the other point really is, because it always crops up in large organisations, who do you talk to? Who's the best person to start talking about really understanding how, on an enterprise level, SWIFT GPI is a major part of your payments transformation?
Right, okay. So various things there. So firstly, I applaud the 2% that said there were revenue generating opportunities. They're probably approaching it correctly and have recognized that GPI is way broader than, simply a bit of a change to how we do cross-border payments. There is opportunity there, and there's opportunity that we're, working with around the banks around the world. We'll be happy to share some of those insights with any bank, any financial institution that wants to engage with us. Nothing hard, just go onto the ACI Worldwide.com website and you'll find links to GPI there. We do business in over 80 countries. We manage a good percentage of SWIFT traffic globally, so we're ready to help if you need us. That's certainly a bit of a sales pitch, I realise, but let's not focus there. But the good news is it's not too late. Yes, you need to be ready for next November with the mandatory components, and we can certainly help there, but it's not too late to be ready with those mandatory components. But what I do urge is do not underestimate the effort. If you're not already picking out FX rates, if you're not already getting certainty of value, if you're not getting certainty on fees and charges, then do not underestimate that. That's not easy to fix, but it can be fixed, and it can be fixed within the time frame still available. But don't put yourselves under pressure. You're going to have to support this, otherwise you're going to stand out like a very sore thumb. And so now is the time to make sure you've got plans, budgets, and indeed the right level of support partner that can get you there as well.
And just pick up on that point, because who do you see is sort of the lead, the owner or the person that has the sort of innovative view on SWIFT GPI? Is it part of a bigger transformational program within the bank? Is it people that are in the product trying to drive it? Is it people that are looking at more efficient means of processing payments?
So I'm in a different room to Daniel, which may be advisable because he may hit me at this point. But we also need to recognise that the world of payments is changing. Things are moving faster from a real-time perspective, but not just domestically, but cross-border as well. We're also seeing the continued rise of the fintech, and indeed there are fintech propositions out there that work for certain use cases. I'm not suggesting for 1 minute that SWIFT is on a decline, obviously volumes continue to increase, and whilst there's initiatives like GPI out there, we see fantastic growth opportunity. But we also have to recognize that customers are bringing new blockchain-based or new use cases to the banks and saying, I need you to support this for me. You're my trusted party. I want to do business with you, but you've got to help me do business this way or a different way. And SWIFT becomes absolutely a core tenant for a cross-border business, cross-border payments business. But we're also seeing the rise of other small fintechs or even larger fintechs that are beginning to offer propositions in the cross-border space. The key for a bank is to make sure you can support the ones that your customers want you to support. And that, again, is something that certainly we're very conscious of at ACI. We work with many partners around the world in the delivery of cross-border payments, and we're keen to make sure that we ensure that a bank's cross-border business is secure for another 20 years or 1,000 years maybe, as we look forward to new technical and innovative propositions that are cropping up all the time.
Craig, thanks for that. Daniel, we're coming to the end. Would you like a minute just to comment on what Craig said there? But we only have a minute.
Well, I guess if I have a minute, first of all, I'd just like to thank everyone for letting us speak today. Additionally, sorry, I had a little audio issue at the beginning. I think if I had one note, we talked a little bit about who should be the initial sponsors of a GPI product. I would also like to address sort of the end state, where it should be holistic. I think as we see institutions become increasingly mature in their usage of GPI, we find cases across any number of departments and actors and sponsors, right? So you could see a case where the directory is being used by folks in network management. I've seen anti-fraud people look at the tracker as a means of reconciling their back office in case there was any type of intrusion. I've seen it used, across different verticals within the bank, from retail to the private bank, benefits for the folks working in securities, be it custody, broker-dealer, investment manager divisions. So there's always the beginning of the GPI journey, but as you mature, ensuring that it's used holistically throughout your institution is also a fun adventure there. Yeah.
A nice note to end on from you there, Daniel. Thank you, and thanks to everybody for joining us. And so, Craig, back to you. Maybe you've got a final thought or two, and would like to say a few thanks, Craig.
Yeah, absolutely. Firstly, thank you to you, Gary. You always host an event like this brilliantly. Thank you to the team at Finextra. I know that there's a team behind you that makes this run smoothly. So thank you very much for you guys. Thank you also to the team at Finextra for keeping us all informed about industry events. I particularly like you filling my inbox on a daily basis with worthy news and events, and that's great. Daniel, thank you very much for the SWIFT contribution there. Thank you also for bringing GPI to the world. I think we're all seeing a much stronger cross-border proposition. But just my final thought, and it's really a key, and I mentioned it already, but I won't be ashamed to bring it back. Do not think you've missed the boat here. You've got opportunity to not just be ready for the GPI mandated changes next year, but also to take advantage of GPI and to build those new revenue opportunities for you. Your customers will love you for it, and sure enough, when we look at the banks that have adopted GPI and really pushed it throughout their environment and their customer products, then they're seeing incredibly strong customer satisfaction, and that leads to customer retention. And at the end of the day, that's what we're all here to do.
Thank you very much for that, Craig, and thanks also from me, Daniel, for your contribution. Thanks everybody for your participation in the polling questions, which gave us some interesting insights, and also for the raft and the range of questions that you gave us. We've tried to cover them all off, and I hope you found this an insightful, enjoyable webinar. We've certainly kicked the tires, as they say, on the topic, and thanks to everybody for making it so successful. Thanks for registering, and I'm going to sign off the webinar now, and do enjoy your evening. Goodbye, everybody.